Last night, the Democrats were supposed to bring up the bipartisan infrastructure bill for a vote. They did not, because they could not get the progressives on board. And they couldn't get the progressives on board because they couldn't get the Senate moderates on board for their $3.5 trillion boondoggle. Meanwhile, speeding down the tracks is the debt ceiling. So the debt ceiling is supposed to be hit in approximately the next couple of weeks. Democrats are trying to get Republicans to sign on to a debt ceiling increase. Republicans are saying, we are not going to allow you to take out a second credit card knowing that you're about to blow out the spending. And so why would we allow you to do that? We need a sort of restructuring deal here. We need to make sure that we get some sort of spending concessions from you at this point, which has led the Biden administration to make the argument that we should get rid of the debt ceiling once and for all. So to understand why the debt ceiling is kind of important, you have to understand the history of how spending has been done in the United States historically. So if you go all the way back to the founding, for basically the first 130 years of the existence of the United States, anytime Congress wanted to authorize the government to take out debt, they had to pass a specific bill that authorized exactly how that debt was to be taken out, which seems like a pretty good idea, right? It puts the responsibility where the responsibility ought to be, with the legislature. Right? Congress would actually have to authorize a loan, or they'd have to allow Treasury to issue bonds, for example. But it would be up to Congress. Congress would actually have to authorize the executive branch to do this, which makes sense. They are the legislative branch. The executive branch is the executive branch. And then, in about 1917, Congress decided they were going to abdicate responsibility on this thing by creating the debt ceiling. The debt ceiling, the idea was that they would just tell the executive branch how much debt they were authorized to take out. Right now, attached to a war, it makes a certain amount of sense, you would assume, because the executive branch is running the war. The executive branch needs to take out more debt on a short-term basis because, obviously, there are battle contingencies. But in the middle of a not war, getting rid of the specific authorization for taking out debt is really just a way for Congress to kick the can down the road without actually having to be held responsible for doing any of this stuff. Like, imagine that every time Congress passed a spending bill, they also had to pass a bill saying, we authorize the Treasury Department to take out this amount of debt on the open market. It would make everybody think for just a second, is this actually worth it? Congress doesn't want you to think, is it actually worth it? So instead, they pass these giant blunderbuss packages and they raise the debt ceiling at the same time. Okay, well, that was the rule up until about the 1970s. Okay, then in the 1970s, there was a problem, which was that the government kept running up against the debt ceiling. So Dick Gephardt was a former congressperson from Iowa. Gephardt imposed the so-called Gephardt rule. Okay, this was a rule that suggested the debt ceiling was automatically raised anytime a budget was passed. You didn't actually have to pass a separate debt ceiling bill. You would just pass the budget, and that itself would be the authorization for the government to take out additional debt. Then, during the Gingrich Revolution of the 90s, this was reversed. So in 1995, Congress said, no, we're not doing it this way anymore. We are not going to simply pretend that every time we authorize spending, the federal government has the ability to go out and take debt. Instead, we do have to take some of the blame or credit for raising the debt ceiling, so we're going to bring back the debt ceiling debate. Now, in reality, we have to go back to the original system. Congress ought to have to specifically authorize precisely what sort of debt instrument needs to be used by the executive branch every time they spend. The reason they really should have to do that is because, again, they should be forced to consider the consequences of the spending that they do. But we have both a legislative branch and an executive branch that seem to want to just spend without any sort of end at all. Now, a lot of this is sort of a riff on modern monetary theory, which is this idiotic idea that the federal government can spend as much money as it could possibly want for literally the rest of time because nobody is ever going to see the full faith and credit of the United States as in doubt. We are always going to be the world's strongest economy. We are always going to be the world's strongest currency. And if we aren't, well, we'll deal with that when we come to it. Janet Yellen, who, remember, was the head of the Federal Reserve. The Federal Reserve was supposed to be a nonpartisan, non-political board. And it is their job to see that the inflation rates remain low and that employment remains high. So Janet Yellen was supposed to be this nonpartisan person. Of course, that Chinese fence, that Chinese screen between the Treasury Department and the Federal Reserve was obliterated long ago, but Janet Yellen has made clear just how fast that was obliterated. She moved directly from the Federal Reserve to the Treasury Department, where she has been now advocating to get rid of the debt ceiling entirely. The idea being that anytime Congress just passes something, it should automatically raise the debt ceiling so we can go out and we can borrow for it. And there will be no leverage to lower spending anytime in the future. Remember, the debt ceiling instrument has been used a couple of times in the past 10 years in order to lower spending or in order to jar certain political items loose. And it's not just a Republican thing. In 2006, Nancy Pelosi actually held up the debt ceiling in order to try and pry concessions from the Bush administration. But most famously, the debt ceiling debate was hit during the Boehner time as Speaker of the House. And the result was sequestration, which was a lowering of the rate of increase in government spending in the federal government. It was pretty controversial because Barack Obama insisted that half the cuts come from defense if there were going to be any cuts, because Barack Obama hated the Defense Department. But it was at least an instrument for attempting to lower the amount of money we spend. Now we have the executive branch saying we want to spend without end, and we don't want any sort of congressional check on how much we can take out in order to pay for your spending. So this is breaking down along partisan lines. Frankly, I'm at least mildly pleased that even Republicans are not on board with getting rid of the debt ceiling entirely. But here's Janet Yellen making the case.
Would you support simply eliminating the debt ceiling so that we don't have to deal with this in the future and can focus on real crises?
Yes, I would. If to finance those spending and tax decisions, it's necessary to issue additional debt, I believe it's very destructive to put the president and myself, the Treasury Secretary, in a situation where we might be unable to pay the bills that result from those past decisions.
Okay, the debt ceiling is a natural constraint on the growth of government. It at least provides a leverage point for reducing the growth of government. Janet Yellen wants it gone. And this is the entire theory of the Biden administration. There should be no limits on spending. It's spend, spend, spend until daddy takes the T-bird away. And when daddy takes the T-bird away, we hit austerity measures. We have to radically increase taxes. We have to cut benefits. And this has happened across Europe. So it's not as though this is unforeseeable. It is completely and utterly foreseeable. Not only that, when you ratchet up the spending, and at the same time you ratchet up the taxes and regulation, which is exactly what the Biden administration is seeking to do, all you end up doing is blowing money into an economy that is stagnating. Right? That's how you get stagflation. That's how you get the 1970s. You can get economic stagnation without inflation. That's Japan in the 1990s, when regulation and lack of entrepreneurship basically destroyed the Japanese economy for more than a decade. That is, I think, a high probability at this point, and even Biden is recognizing that. He's forecasting over the course of the next decade less than a 2% rate of growth to the American GDP, which is a really rotten rate of growth. Okay, but you get stagflation if you have that that terrible stagnation, plus the federal government attempting to pour money into the system via forced subsidies. The Wall Street Journal has a piece today titled "Stock Market's September Slump Exposes Messy Underside." And again, the economy is not doing well right now. It should be blowing the doors off. It really should be. Again, we now not only have the COVID vaccines, but now we have reports that Merck is coming out with a once-a-day pill that reduces the possibility of hospitalization and death from COVID, even if you get infected, by 50%. So we're coming up with excellent new therapeutics. We already have a vaccine that is highly effective. This pandemic, from a public policy perspective, is now over. But the Biden administration can't let it go. And not just that, they are firmly committed to this fiscal policy, which is really about the reorganizing of American life along social democratic lines, which has a cost. Right? Even Sweden, which embraced the so-called third way, this vast spending, vast taxation initiative in the 1970s, they had to get rid of a lot of those taxes and a lot of that spending, specifically because it didn't pay for itself. They had to free up their economy. I mean, there are studies by which the Nordic countries actually have freer business regimens and business markets than the United States does. They have less regulations. They have more ease in beginning a business in many of these countries than the United States does at this point. So the United States is going down a really bad path right here. Says the Wall Street Journal, markets tumbled to end the quarter, sending the S&P 500 to its worst monthly pullback since the pandemic-fueled sell-off of March 2020. Stocks began the day higher, only to slump in the following hours. The S&P 500 wound up falling 1.2% to 4,307.54 on Thursday, nearly erasing the entirety of its gains for the entire quarter. The DJIA, the Dow Jones, it shed 1.6% as well. It suffered its first quarterly loss since the first 3 months of 2020. Now remember, this was the year when everything was supposed to just be guns blazing, gung-ho, no-holds-barred growth. Not really. Central bankers who were thinking this year's rise in inflation would wind up being a short-term phenomenon aren't sure how long transitory pressures will persist. Strategists who had predicted another strong quarter of economic growth are cutting estimates because of supply chain bottlenecks and the highly contagious Delta variant of COVID-19. Economic data have also been falling short of expectations. Citigroup's Economic Surprise Index, which tracks how much U.S. reports have been exceeding or undershooting estimates, fell this month to its lowest level since June 2020. The month proved a major setback for stocks, with all but one of the S&P 500's 11 sectors finishing lower in September. The S&P 500 is still up 15% for the year. It managed to squeeze out a sixth straight quarter of gains. The index is just a few percentage points away from its record close hit in early September. But not everything is moving together. The stock market is probably going to continue to gain, but not nearly as fast as people thought it was going to. The bond market has also caught many investors off guard. The yield on the 10-year U.S. Treasury note flitted above a narrow range for much of the quarter, only to stage a 6-day rise above 1.5% between last week and Tuesday. That was the biggest such advance since June 2020. The move came after the Federal Reserve indicated it was ready to begin reversing its pandemic stimulus programs as early as November and considering raising interest rates next year, given a jump in inflation. Liz Ann Saunders, chief investment strategist for Charles Schwab, says even though there's all this discussion about the market being resilient, the churn under the surface has shown more weakness. Saunders attributes the swift rotations taking place in the market to a bevy of investor worry. She says you have concerns about the virus, you have concerns about the debt ceiling, you have mixed economic data, and you've got uncertainty about monetary policy. She says, I don't know that we're going to get out of this mode anytime soon. And then there's inflation, which is also hitting and not going away. Remember, we were told this was transitory. We are now in October. This is not transitory inflation any longer. This has been continuous month-on-month inflation since the beginning of the year. Heavy month-on-month inflation since the beginning of the year. Now, are we in full crisis mode at this point, given the fact that the debt ceiling is about to be hit and all of this? No, Democrats can pass the debt ceiling anytime they want. They can pass it as a clean bill. If they just brought up a debt ceiling increase and voted along reconciliation lines without any Republican support to raise the debt ceiling, they could. The reason that they won't do that is because they want to save that bullet. Understand, the reconciliation process can only be used 3 times a year. If they use it on the debt ceiling, they can't use it on some other piece of boondoggle legislation they would like to push. What they did do is they passed a short-term spending bill that averted a government shutdown. That extends for another couple of weeks. That was bipartisan. The Senate voted 65-35, the House 254 to 175. Lawmakers reached a deal, according to the New York Times, on the spending legislation after Democrats agreed to strip out a provision that would have raised the federal government's ability to continue borrowing funds through the end of 2022. The legislation keeps the government fully funded through December 3rd, which gives lawmakers additional time to reach consensus over the dozen annual spending bills that dictate federal spending. So we're not going to get a government shutdown, at least for the next couple of months. But meanwhile, the underlying worries continue because the underlying economic theory of this administration is very, very wrong and very, very bad. And it's being driven by the progressive left, which has no understanding of economics, like none at all. So Nancy Pelosi is ripping Mitch McConnell. She says he's playing Russian roulette by not raising the debt ceiling. Is he, though? Because you guys can pass the debt ceiling anytime you want. You have a majority in the Senate of the United States.
As Mitch McConnell himself has said about the need to address the debt limit, this is what he said last time. Don't play Russian roulette with our economy. Quote, yet that is exactly what he is doing, playing Russian roulette. Interesting that he's playing Russian roulette with our economy and with the financial security and the well-being of America's working families.
She's so crazy. She's so crazy. Okay, notice Russian. She does this now with everything, right? Ever since the Russian collusion crap, every time she says the word Russian, she's like, interesting that it's Russian, isn't it? Every time she goes to a restaurant and the waiter's like, well, we do have this Caesar salad with Russian dressing. She's like, interesting, Russian. What mean you by this? She's so crazy. Okay, but again, what this has to do with is an overall spending package and feeling toward how the economy ought to work, not in conjunction with reality. That is going to lead to some pretty dire economic consequences. I know what you're thinking. It's time to binge some more Ben Shapiro videos. Well, you are right. You should. But first, like and subscribe. Perfect. I'll see you in the next video.